In this video, I'm going to share with you my golden rules for risk management when it comes to trading. And I believe these tips, these rules are basically easy and anybody can actually do it and can use them in their own trading. If I leave out anything in this video, feel free to leave it in the comment section below so that it can also benefit others. Okay, so let's get into the video. So my first rule for money management when it comes to trading is never, I repeat, never put more money into your trading account than you can afford to lose. My first golden rule for risk management when it comes to trading. Because the moment the money lands into your account, it's fair game for the brokers, it's fair game for your bad trading habits. So if you are not prepared to lose that money, rather don't put it in your trading account. Leave it somewhere, keep it in your bank, keep it somewhere. Only deposit money that you are willing to lose in your trading account. Somebody will say, well, I can keep my money in there and I can trade with only the money that I want to trade with. I promise you, many people say the same thing, but you will be tempted. As long as the money is in your trading account, you will be tempted to place a trade even when the conditions are not favorable for you to be trading, the conditions don't meet your trading strategy or your trading plan. But just because the money is there in your account, in your trading account, you'll be tempted to just go in, click buy, click sell. And sometimes you've not done your homework and you end up what? Losing your money. So golden rule to avoid losing money in trading, golden rule for risk management in trading is only have money that you want to play with in your account. The rest, withdraw it. The rest, withdraw it. Don't keep your profits in your trading account. Don't even think about it. Only keep money that you are willing to play with in your account. Okay. Rule number 2. I see many people have this tendency, and at some point I also did it as well. When it comes to compounding or growing their trading account, many people believe in more deposits. That's a bad way of approaching your trading. That's a bad way of growing your account. You want to compound your trading, your trades, or grow your account only from the profits that you make. Only from the profits that you make. Don't be in the habit of always wanting to deposit money into your trading account. That's how you keep donating money to what? To the brokers. So set yourself a goal. Let's say you open an account with $100. You open an account with $100. Do everything possible that you can to protect that $100. If you are going to do anything to that account, let it only be from the profits that you have generated from that $100 account. Now, that's going to force you to actually really look at your strategy, your behavior in the markets, the way that you are trading, and you are going to be more focused. So only compound your account, only compound the trades that you are making. Even when it comes to trades, only wait when you are in profit to start adding more positions. So only from the profits, make it a goal to only start doing things from the profits that you actually make in your trading. Then golden rule number 3, always have a plan for managing risk before you trade. Don't think about managing risk after you place an entry. Before you make your entry, you should already know where your take profit is. You should already know where your stop loss is. You should already know how you are going to trail that trade. You should already know where you are probably going to get out, or what's going to happen if your stop loss gets hit, or if you end up in drawdown, or if the trade turns against you. Many people start panicking and start looking for solutions only when the house is on fire. Don't do that. Don't look for solutions because now the trade is not going according to plan. Don't start looking for solutions when the trade is not going according to plan. Before you place buy, before you place sell, already have an idea of how much you are risking, where you are going to get out, if things don't go your way, where you are going to get out of the market, which is also known as what? The stop loss. If you are in drawdown, already decide whether it's still a good enough trade or you should probably just call it a day. So it's important that you have a risk management plan before, not after you enter a trade. Then, last thing, I apologize to answer a call there. Last thing, what you want to do when it comes to risk management, important. Don't be tempted to want to impress people. Don't be tempted to want to impress people with the way you are trading, with your style of trading, with your robots, with your system and stuff like that. That's how people blow their accounts. When your goal is to impress people, that's a recipe for disaster. That's where people take more lots than they probably should. They take more riskier trades than they should have because they want to share their trades on Instagram. They want to share their trades on Twitter, on Facebook. They want to show everybody how good a trader they are. Don't go into trading wanting to show off. Risk management. When you are going to trading because you want to impress your friends, you want to impress everybody, I promise you risk management goes out the window because you want to show people that you are doing spectacular things. So those are some of the golden rules that I just wanted to share with you. First of all, only put money that you are willing to lose in your account. Only play with money that you are okay losing in your account. The rest, keep it out of your trading account. Second, only use profits to grow your account, to compound on trades, to do everything. Only use the profits. So it means protect that initial deposit. Protect it. Do everything that you can to protect that initial deposit. 3, we said plan risk management before, not after you actually place trades. already have an idea of where you're going to get in, get out, where you're going to be stopped out, how you're going to manage that trade. All these things you need to know before, not after you place a trade. Lastly, you said avoid this temptation of wanting to impress people with your trades and your trading style and your system, and people don't care. The only thing that's going to happen is for you to blow your account. Don't be in there to want to impress people. Go in there, trade your account, grow your account, make your money, do what you do. Don't worry about trying to create fame and flexing on people and stuff like that. Many people who do that, they actually abandon risk management and they end up in trouble because they are trying to impress people more than they are trying to make money. If you are new on this channel, please consider subscribing so that you do not miss future videos. Like this video, at least if you learned one or two things, or if you didn't learn one or two things, at least I entertained you for a few minutes. So just go ahead and like the video. If you are looking to download stuff, forex robots, indicators, books, and stuff like that, there are links in the description box below. Visit those links and see if you cannot find what you are looking for. Many people also ask me about the broker that I use. See the link in the description box below. Until next time, guys, bye.